Hi, the central bank announced its policy rate decision today, the Central Bank of Turkey, and it hiked the late liquidity window rate by 50 basis points to 12.75%. We were expecting a rate hike from the central bank as market, but I was expecting at least 100 basis points rate hike, and not just on the late liquidity window, but also marginal funding rate, which is the overnight lending rate at 9.25%. Maybe you don't know, the central bank a few weeks ago cut the limits from marginal funding rate to zero. So the only funding was made via late liquidity window in the last few weeks. So I was expecting some normalization in the policy implementation because by cutting the marginal lending limits to zero, the central bank had no place to move. So to create some flexibility, I was expecting the central bank to use both marginal lending rate and also late liquidity window. So this decision is somewhat confusing because the central bank was claiming that they needed some flexibility in monetary policy implementation. That's why they were using the corridor, and also on the other hand, they want some simplification in the policy, but we don't understand this simplification will be made via just using late liquidity window, because it's not a normal policy implementation. I mean, using the late liquidity window. The decision was both insufficient for fighting with inflation and also somewhat confusing for the market. I think the central bank will continue with measured rate hikes going forward, because I don't think it will be sufficient to curb inflationary pressures by just 50 basis points tightening. In the statement, I was seeking for some more hawkish statements or some more concrete forward guidance about the policy implementation. But although there is some highlights for the increased risks over pricing behavior, as for the forward guidance, we saw nothing. The statement is exactly the same as the previous statement. So the market reaction has been quite harsh. It was unsatisfactory. So the exchange rate was hovering around 3.82 by morning hours, but immediately after the decision was announced, we saw above 3.88. So the exchange rate reflects the market expectations for a higher tightening. Going forward, I will be revising my inflation expectations. I will share with you, of course, because as I was thinking that the central bank will move with more concrete moves to contain inflation, and focus more on price stability rather than financial stability. I was expecting some moderation by the final quarter of next year on the inflation side, but now I think for the central bank it will be hard to lower the expected pricing behavior will get hurt more after this decision, and also credibility gap will widen significantly, I guess.